Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's absolutely flat. There's hardly, a point to change. Actually, there isn't even half 1 point change in the Nifty. Half a point, 10,402 is where the Nifty is trading at. So it's actually pretty quiet down there. About 0.17% of the Sensex. The Midcap index is again flat. And the Nifty Bank is selling off just about a little bit. So nothing really to report from the market here. Advance decline has worsened. Declines now 1,230 odd stocks. Advances just about 80 stocks. You're with us here on a fresh new edition of Midcap Radar. I am Prashant Nair. With me, my colleague Reema. Reema, hi.
Hi, Prashant. Well, the global rally seems to have paused a tad bit. The European markets, if you can get that up for you on your screen, after the 1% up move yesterday, are just down a tad bit. But a big order win coming in for Bajaj Electricals. The total order size is 2,389 crore, where the company will be executing electrification as a part of the government's Saubhagya scheme, which is Power for All. They will be conducting it in various districts of Uttar Pradesh, and the timeline of execution is 15 months. Top
stories will get you more as we go along, but let's focus back on the market, which is almost unchanged. Ashwani is with us, as always, on the top of the show. Ashwani, thanks very much. I mean, your reading of the screen, what's it looking like?
See, a couple of things. First of all, Jubilant Food and Titan are again moving to new highs. So that's an outperforming group, and when they move, generally the market tends to perform. The other thing is that banks are coming back, which means that they are getting over that disappointment, which was basically a shakeout because of that large move last week. And chances are there could be more short covering on the banks as we go into the close. Now, having said that, Edelweiss is a buy with a stop of 265, target of 282. ICICI Pru is a buy with a stop of 395, target of 420. DCB is a buy with a stop of 172, target of 184. And also on Axis and ICICI, they've had a one-day pause. So anybody who wants to get in fresh, this is your opportunity, because strong stocks, if the dips don't have follow-through, they tend to get back to their, gaining ways.
Ashwani, you spoke about Jubilant, but even the other consumption stocks, the Titan is at a fresh 52-week high. Big move that you can see right now on that. HUL has been steadily climbing through the trading session, a 2% up move as we speak. Any thoughts on these consumer names?
See, in quote-unquote inflationary environments, FMCG tends to do very well. But overall, this year is about consumption. So FMCG index is outperforming the Nifty and include consumer stocks with it. So I think that whole group is doing very well.
Right. Ashwani, just a quick word on two names. One is actually one stock and another group of stocks. DLF, which has moved up, from 200 to about 215 now. And the other is oil marketing. Any supports around where they're trading?
I've been saying for a while that oil marketing story is over. So once, the upside is over, the triggers on the upside, now, anything related to crude upside is going to be negative. So chances are they'll fall further. Maybe not immediately, but the way it's panning out, they're down 30-40%. I think the big upside on crude is basically done. I think real estate is doing well. Choba, Godrej Property, etc. Out there, buying is visible. So I think it is tying in with that. DLF corrected from 270 to 200. So, there is some buying happening in all property stocks.
Okay, Ashwani, thank you very much for that. Well, the oil marketing companies have got an oil shock today. They've taken it on the chin, as reports suggest that the government has asked the oil companies to absorb a price hike of 1 rupee per litre. Sonal now joins in to tell us what analysts are making of this particular development and the impact it will have on the OMC. Sonal?
Thanks a lot for that, Reema. Well, looks like that Jefferies already had thought of something like this, that OMCs will be asked to absorb this 1 rupee hike. They said that already the provisioning for these oil marketing companies is less, and if there are any unmet under recoveries, and they're assuming that for every 10,000 crores of unmet under recoveries, if shared equally between the upstream and downstream companies, will be impacting the EPS. So for the likes of ONGC in Oil India, the EPS could be cut by 7 to 10%. For IOCL and BPCL, it could be cut by 9 to 10%, while for HPCL, EPS could be cut by 13%, because they're assuming HPCL's share in these unmet under recoveries to be the highest. For Antique is also quite negative. They say that for every $1 per barrel increase in the crude prices of petrol and diesel need to be revised by 0.5 rupees per litre, and 1 rupee litre reduction in retail marketing margins of OMCs will affect their annual PAT. So for the likes of IOCL, it will impact 19% of their profits. For BPCL, it will impact 26% of their profits, and for HPCL, they think that it will impact 27% of their profits. But they think that this event will impact the profitability of OMCs, but it will only normalize those levels, because earlier they were having higher marketing margins, but now it will become to that normalized average of around 2.2 to 2.5 rupees per litre. Motilal, on the other hand, says that this is an event. They do not think it to be a big, to have a big impact on these OMCs. They say that OMCs already raised their marketing margins in last quarter, and now this is higher than the 2.7 to 2.8 per litre marketing margins they had been getting on average every year. Due to these cuts in the prices, gross marketing margins would decrease to the 2.2, 2.4 per litre levels, but FY19 they've already considered this, and they think that if at all they have to absorb this price hike, it will impact their EBITDA only by 2 to 4%. Also, they think that the oil prices, they have spiked due to the geopolitical reasons. This will cool down in times to come, and this will provide some relief to the OMCs. So they do not think that it will impact the OMCs in a big way. Back to you.
Sonal, thanks very much for that. So it's quite instructive to see. I mean, if you look at any of these stocks, even after there was one news flash which came about an hour and a half back, and this was attributed to oil marketing companies, and it essentially just said that they have not been instructed by the government to increase, to not pass on, I mean, any price increases. But there was, I mean, 0.5% odd move on these stocks higher, and then they've all promptly sold off. And the reason for that is that, I mean, if there is any instruction like this, it's not going to be in the form of a circular or a letter or anything of that sort. There wasn't any before the Gujarat elections in late 2017 when we used to track gross margins for all these companies on a daily basis, and I mean, you know, margins dropped down to next to nothing, and that was the result of prices not being increased, even though global prices were going higher. So the same thing can happen here as well. I mean, the big Karnataka elections are next month, and it's entirely possible that we see no price increases going into that election. But post the election, post the Karnataka election, like what we saw after Gujarat elections, you know, prices are allowed to go up. And actually, all of the under recoveries sort of recovered. But the problem is, it's not just Karnataka. We've got later in the next, I mean, later through the course of 2018, 2 or 3 important state elections. So this could repeat. The cycle could repeat. So I guess people are of the view, even if this is temporary, what's the hurry? There's no real reason to go in and buy. So stocks are still lower between 6 and 7.5%.
And multiples also, investors also lower the multiples when they know that, you know, the government can potentially tinker and interfere with the pricing. So even I mean,
it's completely could be completely political. No other reason why this has to happen. And remember, the government has already, I mean, top officials have already gone on record telling CNBC TV 18 that they're not going to touch excise. I mean, they're not going to cut excise duties. So I mean, in that scenario, the only thing which oil marketing companies can do is increase prices, and if that is not allowed.
The next company on our radar right now is Generic Engineering, Construction and Projects. It's a small construction company with a strong presence in Maharashtra. The stock has gained close to 2% in trade. This is after the company has announced that they won orders worth 101.5 crore from 5 different clients. Tarak Bipin Chandra Gaur, the whole-time director and CFO of the company, joins in now. Good afternoon, and thanks so much for joining in. With this, your order book stands at a little more than 500 crore rupees. If you could tell us what should be the revenue run rate you will enjoy with this deal pipeline.
Yeah, good afternoon. The revenue order book stands at 534 crores, post 101 crores of the orders that we have just won in the quarter 4. We expect to have a turnover of approximately 250 crores in the financial year 18-19.
Okay. Will this kind of 100 crore order run rate sustain from here on a quarterly basis? Or these were, bunched up orders that you were expecting and just came in together?
No, we are expecting rather to increase from here on. So the order run rate henceforth in the quarters should be either between 100 or 150 crores.
Right. So you're a contractor essentially, right? Contracting work and EPC, basically.
Correct. Yes.
So if I look at your numbers, I mean, if I look at the top line, for example, you had a big jump in FY17 over 16. I mean, sales in FY16 were next to nothing. In 17, they were about 40 crores. The trailing 12-month number is about 41 crores.
Yes.
Could you tell us what has changed? I mean, not just now, but over the last couple of years. I mean, basically, what's changed after FY16?
Okay. I would just like to put a light on the fact that we entered a listed company via business transfer agreement route, which was in November 2016. So the turnover from November 16 to March 17 is the contracting receipts, which is on the BSE website. It is 38 crores. And prior to that, there was no contracting receipts. So the company did not have a substantial turnover in 2016. 2017, we had half-year turnover, which was 38 crores. And in 2017-18 financial year, we have a full year contracting turnover, which is 140 crores.
You basically acquired this listed company. I mean, that's what happened. You already had this work and you put that business in this company, basically.
Correct. Right.
So what kind of, what are the sectors that you do most of this contracting work in?
So we are actually spread across multiple sectors. We do contracting for real estates, which is commercial as well as residential buildings. We also do it for hospitals. We also do contracting for cold storages or cold chains. And we also do it for industrial buildings.
Okay.
So the orders that we have just won right now, which we have placed on the BSE website, is 101.53 crores. Again, it is a mix of all of them. So for example, we have won an R&D center from RP Industries. This is an industrial building. We have won a commercial building from Skyline Icon, which is a commercial building, real estate. Residential from Triveni Lifestyle, residential, real estate. We have won cold storage from Royal Cold Chain, that's a cold storage. And we have also won Jindal Sanjeevani Center, which is the the CSR activity of JSW Steel Limited.
What is the growth trajectory that you see for the company? Would you look to expand the kind of work that you do? Or are you already doing hospitals, commercial, residential, etc.? Would you like to expand that scope? Where do you see the company in the next 3 years? Plus, you've got some fundraising to the tune of 90 crores.
Yes. What we are projecting henceforth is that we are very good at constructing hospitals. We are very good at constructing cold storages and industrial segments and real estate. So these are the three spheres where we continue to grow ourselves within these sectors. And for FY 18-19, we expect a turnover of approximately 350 crores plus.
Okay.
Sorry, 350 crore turnover in FY19.
250 crores.
250 crores plus in FY19.
FY19, yeah.
So, I mean, essentially that's 141 becomes 250.
141 becomes 250, yes.
Okay. What about profits? I mean, so I think you've got margins at about 10%, right? Net profit margins.
10% is, I think, a PBT margin. The PAT margins are approximately 7%. So on a 141 crores turnover, we are expecting net PAT of 10 crores. And that will continue in the future years.
Welcome back. The market has not really moved. I mean, 5 points higher on the Nifty, so flat. Bajaj Electricals, the company's in focus, as it's announced that it's won orders for 6 rural electrification projects worth about 2,400 crores under the government Saubhagya scheme. I think we've got the management now joining in. Mr. Bajaj, thank you for your time. Could you tell us if, I mean, this is essentially transmission distribution work, right?
This is rural electrification. This is under Saubhagya scheme. This is not transmission. This is, taking to the BPL, the below poverty line, to electrify where there's no electricity. So this is an electrification project. This is not a transmission line project.
No, so what will you exactly do here?
We have to lay the cable and all, and make sure that, like we've done 25,000 villages all over the country, where there was no electricity, we have provided electricity to 25,000 villages. So here we've got orders for 2,400, about 2,389 crores, which is including GST, so about 2,000 crore order. We are covering 6 districts in UP, in eastern UP, including Varanasi, Balia, Azamgarh, Jaunpur, Fatehpur, then Pratapgarh. So these are places where there is no power in some of the...
So Mr. Bajaj, so essentially this is transmission. I mean, you're doing it under the for the Saubhagya scheme for the government.
See, it's not. See, the transmission is seriously where you are, like you do for power grid and all. That is transmission. This is power distribution. This is laying a cable and making sure that there is the power where there is no, in the village there is no power. We are providing power to the village. Every household we are trying to provide power. So it's very different from where one is your transmission is transmitting. So you form these transmission towers where you're transmitting towers from one state to the other or from one place to the other. That is transmission. Here we are talking about power distribution, which is a rural electrification project under the Saubhagya scheme, so that as per the Prime Minister, that by 2019 all the villages should be lighted. They all should have power. So on that basis, we have to lay the cable. We have to see that the point is given to every household must have electricity. That's the idea.
Mr. Bajaj, it's a government order, so what should be the margins we can expect on it?
No. We work at a similar type, so there is no special higher margin or lower margin. Our EBITDA levels which should not change because of this. It should be similar. It is a 15 months project, and the idea that we and this is under the Saubhagya scheme of Prime Minister. So therefore, there's good financial security that we have to see that we finish on time, because they want to do it, as you are clear, that it has to be done before 2019, before the election. So therefore, this is something which is we will have to do it very quickly and finish it off 15 months.
Okay. So in you said the order size X of GST would be about 2,000 crores to be executed in 15 months. So in the coming year, in FY19, this particular order can add revenues of close to 1,600 crores to your top line?
No, it doesn't work this way. I would say out of this 2,000 crores, you can take it, maybe 1,000 crores will be this year, because by the time all the formalities are done, it takes about 2 to 3 months before I can start the work. So we've got, from the date when they finally sign off and give us, then they'll give us 15 months. So maybe 8-9 months or maybe 7-8 months this year and 7-8 months next year. So about 800 to 1,000 crores will be this year, and the remaining will come next year.
Okay. So coming to your consumer business, how has business been? When we last spoke to you, you indicated the month of January has been very strong. Did it continue?
And February, March has also continued to be very strong. Our growth levels are going because basically our whole focus for the last 2 years is to stop wholesaling and do distribution, and therefore now the distribution is in place, and therefore, and especially with the government emphasis in rural markets, therefore our distribution, we are covering 450 districts, and we are covering almost 160,000 outlets on a weekly basis. So that is something which nobody is even thinking, because a wholesaler only goes to the major market. They don't go into the rural market because it's an expensive proposition. And therefore, but there is a buying power there, which is the benefit which we are going to get substantially, and therefore a double-digit growth plus something more. I'm just being conservative by saying double-digit growth will definitely come month on month in the coming year, or in the current year.
Okay, Mr. Bajaj. On that optimistic note, we'll have to wrap it because we're running out of time. Thanks again for joining in. That's the word coming in from Bajaj Electrical for the market. Just about in the green for the Nifty and the Sensex. The Bank Nifty down 0.5%, but off its early losses.